Folks, welcome back. Just a quick little recap on today. Promise to be brief. All right, so this is a weekly chart. This is dollar index. I'm going to kind of blend in dollar, euro, and NASDAQ all in one video because it's late tonight and you guys are probably wanting to get to sleep and I have to get some sleep tonight as well. So, weekly chart, I mentioned the last time we got together that we had sell side below here and near term sell side right there. So far for the week, looks like we're doing what's expected. And south side below here. I like the fact that we closed below consequent encroachment of this wick. Okay. I'll let you see that. So yeah, right there. So that close below gives me confidence. That's one of the things I like to see signature wise for price delivery. It warrants a higher degree of probability that that low will be taken. If it's going to take that low, where can it go next? The sell side liquidity resting right below there. Okay. And then we have to watch the consequent encroachment of this wick and measure the interest in whether or not it wants to plow through that lower at 97.17 and a half. And then the next order of business would be below here. And that small little gap in here, I'd like to see that act as an inversion fair value gap. Should price get below it. That's a long-term perspective on the higher time frame weekly chart. And we'll drop down into 15-minute time frame. And I mentioned today that I wanted to see a couple things on dollar index. I wanted to see it go lower, obviously. Treat this as an inversion fair value gap. Hit it as resistance, go lower. And we've done so. We took out the sell side below here. So that opens up the avenue for a higher euro dollar, which is where we're going to go to next. So real quick, jump back to the weekly chart. And then euro. That is too many U's. Alrighty. So I counseled you to take a look at the weekly chart on euro, and we were going to be utilizing that premium wick, which we treat as a gap. Okay, and we graded that, and we traded above and closed above the consequent encroachment, and we hit the upper quadrant at 1.15284. Went just a little bit above that. I think the 29 something. Yep, 1.15293. So we were able to do that there. The draw still is this high, and then if it can get above that, we'll be looking for continuation into the relative equal highs right in here. So there's buy side rates thing at 1.19087 pipettes. All right, and we'll drop into the 15-minute time frame here to save some time. And I mentioned in this this morning's recording showing that we were looking for. Well, at first, I like the fact that we had that reaction there off of that inversion fair value gap. I mentioned last week that didn't really materialize. It kind of folded over during the non-farm payroll, which is classic. That's the reason why I tell you not to trade it, because as strong as my stuff is, it's so manipulated. It's almost more likely that everything you're expecting to see in non-farm payroll to pan out technically won't happen. Okay, so extending that through, and I'll let you look at the videos that tell you where these levels come from, because I already showed that. I mentioned this morning, I liked how it used that inversion fair value gap there. And then I told you I wanted to see this gap. Let's show it on a chart where it was originated from. I wanted to see it, use that as an inversion fair value gap. Back into a 15-minute time frame. We traded off that inversion fair value gap here, rallied higher, come back down, and used it. Look closely. See that right there? It left the lower half open. That's the signature we like to see when it's bullish. It rallies higher, breakaway gap. See that? Consequent encroachment of this wick right here, came right back down into that, rallied, fair value gap, and a quadrant level on the wick, which is the consequent encroachment of that weekly premium wick, accumulated around that, and then sent it up into the upper quadrant of that weekly premium wick. That's the high of the weekly wick, upper quadrant, beautiful delivery, consequent encroachment, midpoint, lower quadrant, and the low. Okay, so just a really nice little run on Euro. These runs aren't really all that spectacular in terms of the magnitude or number of pips, but using the inversion fair value gap, and I forecasted that actually before price actually did it. And when we were down here, so price ran through it on the CPI number, came back down in, used that support, and then rallied. Okay, so it's obvious it's using prognostication and foresight, not hindsight. And the idea is that you're looking for stepping stones to get to initially this high here and then gravitate to the next level on that weekly premium wick. And above this would be what? The upper quadrant level. Okay. So we'll see what we get to tomorrow morning. We have the PPI number at 8:30 Eastern time. So it's one of those things. Don't trade ahead of it. Don't be in front of it. I know I did it this morning just because I don't claim to be the biggest. Okay. I don't claim to be the largest, but I am the fucking best. Okay. So we're going to go over to the NASDAQ. We'll go up to the daily chart. And we'll drop in with NQM 2025. And there's the business there. Now, obviously, unless we have something completely unravel the markets, and in this climate, anything can happen, right? Draw is here, old all-time high, relative equal highs, which the lower on the right side, that's a good candidate for it. Now we're going to zoom in. Okay, and there is February 21st, 2025 daily SIBI right there. And then we had the consequent encroachment of this wick. So we pierced through that. Now here's the concern that you have to have going forward into tomorrow. We rallied up on Tuesday, closed below the consequent encroachment. Then we opened today and rallied up through that consequent encroachment, that wick right here, and then into the low of the SIBI and lower quadrant, but failed to get the consequent encroachment midpoint. We gave up the ghost, went lower, and then we opened here, traded up, filled the gap, and broke lower. Now we're at basically the consequent encroachment of this old SIBI. So this is the one we were watching for like a month and a half almost. Then it delivered. Now we're having a hard time finding footing here. So it makes it a little bit more complex going in. I certainly don't want to forecast anything that specific ahead of the PPI number at 8:30. Overnight trading, you got to be real careful with that. You can trade up to London, about 4 o'clock in the morning Eastern time, but then square your positions, and just sit tight and just wait for the 8:30 news to come, and wait 10, 15 minutes after that, and then this is open season on whatever liquidity or inefficiencies are there after the fact. All right, so we're going to drop down into a 15-minute time frame real quick. All right, and you can see the effects of price reaching up into that premium February 21st SIBI. Trying to find the end of that rectangle so I can square up with it. I mean, a little too long for it to be used on. There you go. There's the business. Alrighty. So today you can see how we rallied up into that. Big, nice, long premium wick. And then it breaks lower before, after running up like that. We didn't get to consequent encroachment. That to me is underlyingly weak. Now, it's not me calling the top in the NASDAQ. This means that ahead of a big news driver tomorrow, it was able to get to where we were aiming for this morning. I told you that it was going to reach up into this before the CPI number, okay, and before the market did all this movement in here. It went right up into where I said it was going to go. I executed. I showed you that. And it was just really beautiful to see it. And then it banged around in here a few times. I did one more trade going long on the ES. I'm not going to review the ES because it's pretty much just a straight bullish breaker to a minor buy side liquidity pool. So if you watch that video that I uploaded, I was texting another YouTuber, Trades by Matt. I kind of called out a level. I told him like 60-60 on ES. And then I traded it to, I do that a lot with him. I'll toss something to him just to be an icebreaker, just because he's usually live streaming, and I like to watch to see if he reacts to anything that I'm talking about. He's pretty cool about it. Just reads it. You probably would never even know I'm talking to him, but I called out 660 on ES, and then I traded it, and that's why you saw the tweet today that cabbage is like a street slang for bread, lettuce, money, making some green. But we failed to get up into that consequent encroachment with this pass here. Okay, and then they gave up the ghost, went lower, and the sell side below here was taken. This area right in here, that to me most likely will probably be utilized overnight or going into the PPI number. How we are dealing with that after it happens is, well, most important for going into next week. We have a little bit of a weird week next week, schedule-wise, economic calendar-wise, but we have a more pressing matter that's this particular weekend. So there's a lot of things that could pop off on this weekend in the United States. So if you're outside the United States, pay attention to all the things that are making headlines and where they're happening. And if you're in the U.S., be careful. Okay, try to be very, very aware of what's going on, because it could get very dangerous, uncomfortable, and just keep your head on a swivel. Okay. 1 minute chart. We'll drop down into that, and then we'll wrap this up. Make it pretty short and sweet. And new day opening gap, cleared relative equal highs here, broke lower, came back up in top of the gap. Remember, this candlestick closed high. So that's the high of the new day opening gap. When you look at this like this, it's easy for new students or new traders that are learning from me to think that that body to that low of the body, that's the gap. It's not. It's how that candle closed. So it looked like this. So there's your new day opening gap. It would be anchored like that. And you can see how it just hits it beautifully there. Bang. You're going to tell me that's buying and selling pressure, right? Wyckoff talked about that. That's what you're going to tell me? No. No. That didn't happen. So, but look how smooth this area is down in here. After we hit the high of the new day opening gap, it breaks lower. Volume imbalance. Look at that right there. Beautiful. Right there inside of it. Breaks lower. Sell side below here. And this low there. See the higher low? That's a very good candidate for a run. It reaches through that. And then look at the quadrant right in here. See that? Upper quadrant on that inefficiency on the 21st of February. Or am I correct by saying that? I'm beginning to doubt myself here. No, it's the 24th of February, right? That's the high of it, the upper quadrant, consequent encroachment. And we have the lower quadrant down here. That's the 21st. So I got a little disoriented there. I had a Biden moment. So you can see how we broke aggressively in here on the 1 minute chart. Came right back up in inefficiency there and got real ugly going into the final hour trading, left relative equal lows. Now, note these relative equal, I'm sorry, I said relative equal lows, it's relative equal highs, excuse me. The relative equal highs, this one's lower than that one, so it's a high probability candidate, just like this is here. But if it's going to come up here for these, then it's likely to get that. So overnight or going into tomorrow, let's play devil's advocate for a moment. Say we go down lower here and get into the lower quadrant, and then we repel from that, go higher. This will be a draw right here. Unless something overnight happens and a complete meltdown takes place, I suspect that this level will be utilized between London and New York session. Okay. And just think 8:30 Eastern time. That might be a draw on liquidity. I'm not suggesting that that's all that it will do, but I want to see a framework that aligns for a price run into that area. For the new students or for the people that like to understand correctly, and not the ones that want to hear what I say and take it out of context, when I talk about a draw on liquidity, I like that level, but I still have to wait for some market structure, some kind of a timing aspect, maybe a macro that will align with the price action that will deliver to that. So it's not just simply me saying, okay, here's where I think it's going to go right now as soon as I make it public. You still have to wait for a measure of structure behind the idea. And that's one of the biggest gaps in understanding that new students or new viewers of my content, or if you're watching me on Twitter, I'm sorry, X, and I'll point to something that I like, and it may do a bunch of things before it gets there. I'm not involved in anything unless there's a setup. And then when the setup forms, then you see me record, then you see me execute, then you see it deliver with precision. But just simply because I like this level right now doesn't mean that I would go in long right here. I would like to see it trade down to the lower quadrant, then reject that, build some kind of a, bullish structure, short-term wise, and then make an attempt to get up and disrupt all this stuff. Because primarily we're still bullish. I'm primarily bullish. Let me correct myself. That doesn't necessarily mean that you should be bullish. It just means that I'm sharing and showing my hand to you publicly that I still believe NASDAQ can go higher. I'm willing to be corrected by the market should it say not today. And I will just get in line with whatever it's going to offer intraday. But because it's primarily long-term bullish, this being a very obvious, very, very obvious level of relative equal highs, just like this is here. When you see these, longer term or intermediate term highs like that, it's easy to assume that this is the most obvious one. So why ain't that an interesting idea for buy side? Because these are so close to one another. You got to think about like retail traders. They like looking at these things and think that that's strong resistance. They think that's strong resistance only because the market went up high, failed to get to that high. That's engineered. That's all designed to build an idea that that's a very strong resistance. And what does it do? It coaxes them into pulling their trailed stop losses if they're short down to that level or just above it. And that it's like the easiest thing I've taught traders to do all around the world is to use these relative equal highs as a magnet, a draw on liquidity. It just sucks the price into them because there's large pools of liquidity there waiting to be taken. And you don't need to know how many orders are resting above it. You don't need a book map. You don't need a, whatever these things are people create. In the beginning, it may be helpful for you, but you certainly don't need to be dependent on any of that stuff. So let's scroll back here, and this price run up here going into that February 21st, 2025 daily SIBI. Trades into it, yield to ghost breaks lower. There's a beautiful sell side imbalance, buy side inefficiency right here. Trades up into that. The body's showing consequent respect, and then breaks aggressively lower. Breakaway gap, didn't come back in and fill it. And then it rips lower to sell side. Look at these relative equal lows. That's a huge candidate for what? Another opportunity to draw lower. The market rallies up, and look what it does. It leaves these relative equal highs here and then sells off aggressively. That right there seals the fate for retail's thinking that this is going to be very strong or stiff resistance in an underlyingly primary bullish market with a high impact news driver tomorrow at 8:30 Eastern time. So that's part of the understanding of building a narrative, looking at bias, looking at how things might be used and incorporated with price delivery. Now, it's all forecasting. It's not guaranteed. Obviously, I could be wrong. I was wrong with non-farm payroll last week. I was wrong in the sense that my expectation for NASDAQ didn't pan out and Eurodollar didn't pan out on that one given day. But that one given day is non-farm payroll where I've admitted publicly that's like kryptonite for me. And honestly, I think it's kryptonite for everybody because it's not meant to be traded by professionals. It's just a carnival ride, and it's a lot of interest in it by low IQ traders that have no discipline. They have no model. They have no respect for risk. They have no appreciation for the measure of uncertainty that comes along with non-farm payroll trading. So anyway, that's the business, and I will catch up with y'all guys next time I'm on X. I don't know if it'll be tomorrow. I don't know what my wife's schedule is for us tomorrow, so it'll be up in the air as to what takes place. If I have time, I have opportunity to post and let you know what I think is interesting or make a comment about something, I will. I just don't want to make any promises about it, okay? Till I talk to you next time. Be safe.